Welcome to Explain the Charts, your go-to source for in-depth market analysis. Today, December 4th, 2025, we're putting Intel Corporation, ticker Intel, under the microscope as it navigates a period of significant market volatility. Recent weeks have been nothing short of a roller coaster for Intel, with major news sparking intense market reactions. The primary driver has been the widespread speculation that Intel is on the verge of securing a significant deal with Apple, potentially manufacturing low-end M-series chips for MacBooks and iPad Pros. This highly anticipated partnership, initially predicted by TF International Securities analyst Ming-Chi Kuo and gaining traction since late November, sent Intel's stock soaring. Many analysts saw this as a crucial validation of Intel's ambitious foundry strategy, which aims to diversify its business and compete more directly with industry leader TSMC. This positive sentiment, combined with Intel's Q3 2025 earnings beat expectations announced in October, contributed to a significant rally pushing Intel to new 52-week highs. However, despite these strong short-term tailwinds, some analysts cautioned that the rally was largely sentiment-driven and that substantial foundry revenue might not materialize until 2027. We can observe the broader trajectory of this excitement and the subsequent dramatic reevaluation on the daily chart as we zoom out. Zooming in on the more recent price action on the daily chart, particularly from mid-September, we see a remarkable ascent that clearly illustrates the market's response to the Apple deal buzz. The stock climbed steadily from the mid-20s, breaking through multiple resistance levels fueled by growing optimism and investor enthusiasm. This bullish run culminated in strong closes. On December 2nd, Intel closed at an impressive $43.47, followed by a further rise to $43.76 on the daily candle, reflecting the beginning of the U.S. trading day of December 3rd. This reflected the peak of the recent bullish sentiment, pushing Intel towards its 52-week high of $44.02, as cited in the news. However, our provided chart data for the conclusion of the December 3rd trading day tells an astonishingly different and abrupt story. We witnessed an abrupt and precipitous decline, with Intel closing at a shocking $21.96 on December 3rd. This represents an almost 50% drop within a single trading session according to our data, a dramatic short-term reversal that can only be described as a brutal reality check for investors. The sheer speed and magnitude of this plunge suggest that either earlier optimistic reports were rapidly reevaluated or a new, undisclosed negative catalyst emerged, leading to a massive wave of selling pressure that unwound weeks of gains. To understand this intense shift, let's switch to the 15-minute chart to examine the intraday movements leading up to the daily close on December 3rd. Here, we can observe the stock trading robustly in the low $40s through December 1st and 2nd, and continuing into the early hours of December 3rd, reaching highs around $43.88. The smaller timeframes show periods of consolidation and continuation, demonstrating that the upward momentum was quite strong before the ultimate collapse. This granular view confirms the bullish sentiment that was prevalent, with consistent buying interest. However, it's crucial to note that the available 15-minute data unfortunately only extends to December 4th at 0:49 Universal Time Coordinated. This means it doesn't capture the full extent of the catastrophic decline to $21.96 that finalized the December 3rd daily candle, implying an extremely rapid and intense selling pressure that occurred either very late in the U.S. trading session on December 3rd or in the immediate after-hours period, outside the visible range of these intraday charts. Returning to the daily chart, this sudden reversal dramatically alters our perspective on key price levels and their implications. Previously, the $43 to $44 mark, representing recent highs and the top of a strong rally, acted as formidable short-term resistance. Now, that same zone stands as a significant overhead resistance level, a psychological barrier for any potential recovery. Immediate support after such a steep fall is critically important for traders and long-term investors alike. The $21.96 close places Intel precariously close to a historical support zone. This floor, situated around $19 to $20, previously acted as a strong rebound point in August 2024 and early 2025, especially after Intel's Q2 2025 earnings report saw shares plummet. Another significant level to watch is the $24 to $25 range, which previously served as both support and resistance throughout 2024 and earlier in 2025. If the stock can stabilize and find buying interest at current levels, a sustained move back to this range would be a crucial first step towards recovery and signal a potential bottom. Failure to hold the $19 to $20 range, however, could indicate further downside risk. For a broader view of the preceding uptrend, let's examine the 1-hour chart, even though it doesn't extend to the most recent daily plunge. This time frame, covering early to mid-November, provides valuable insight into the steady uptrend and building momentum. We can clearly see sustained buying pressure with higher lows and consistent closes above key moving averages, especially through mid-November where the stock steadily climbed from the mid-$30s. This pattern suggests that market participants were gradually accumulating shares, driven by the increasing positive sentiment surrounding Intel's strategic shifts and the Apple rumors. The consistent positive price action, along with healthy trading volumes, underscores the strong underlying demand and optimistic outlook that characterized the period before the dramatic December 3rd reversal. This prior strength highlights how abruptly sentiment shifted, leading to such a significant reevaluation. Now, let's weigh the factors contributing to both bullish and bearish outlooks for Intel, considering both short-term and long-term perspectives. On the bullish side, the undeniable potential of an Apple deal, if it fully materializes and includes higher volume contracts, offers significant long-term validation for Intel's nascent foundry business, potentially attracting other major customers and boosting overall market confidence. The company's Q3 2025 earnings report, which beat expectations, along with CEO Lip-Bu Tan's aggressive focus on cost-cutting measures and strategic investments in expanding global operations, such as in Malaysia, are all positive indicators for long-term efficiency. Furthermore, the overall growth trajectory of the semiconductor market, driven by increasing AI demand, provides a favorable industry backdrop for Intel's future. However, the bearish arguments are now profoundly amplified by the stark reality of the recent chart action. The sheer magnitude of the December 3rd drop suggests a profound loss of confidence in the short-term prospects, an extreme repricing of expectations related to the Apple deal's near-term revenue, or a deeper fundamental concern not yet fully disclosed. Intel still faces intense and relentless competition in the AI and data center markets from rivals like NVIDIA and AMD, making market share gains challenging. The stock's historically high P/E ratio, despite this recent price adjustment, still signals potential overvaluation relative to its sector peers, making it vulnerable to further corrections. The ongoing cash burn for its ambitious CapEx projects and the legal disputes with TSMC also add layers of uncertainty and risk. Short-term, the sentiment is decidedly bearish given the unexplained, massive plunge. Any significant recovery would require extremely strong and sustained buying volume to overcome the current fear and skepticism gripping the market. Long-term, Intel's success hinges on concrete foundry customer commitments that translate into substantial revenue and tangible, competitive progress in its AI chip strategy, moving beyond mere speculation and into demonstrable market execution. For traders, closely monitoring the $20 level remains critical as immediate psychological and historical support. The $24 to $25 area will serve as a key initial resistance if any bounce materializes. A confirmed rebound with sustained, high-volume buying would be a bullish signal, while a decisive break below $19 could open the door for substantial further downside, potentially retesting the deeper lows seen earlier in the year. To recap our analysis, Intel experienced a powerful rally to the $43 to $44 range, primarily fueled by the buzz around a potential Apple deal. However, this optimism was swiftly followed by an extreme and unexplained decline according to our chart data, with the stock closing around $21.96 on December 3, 2025. effectively wiping out months of gains. Key price levels to closely watch are the immediate historical support at $19 to $20, which is crucial to hold, and the overhead resistance at $24 to $25 on any potential rebound. Our unbiased prediction for the very short term is continued high volatility, with a moderate likelihood, around 60 to 70%, of further testing the $19 to $20 support if negative sentiment persists or new bad news emerges. Conversely, there's a moderate likelihood, around 40 to 50%, of a short-term bounce towards the $24 to $25 range if buying interest re-enters the market, reinforced by any news of stabilization or positive corporate announcements. The long-term outlook for Intel, however, remains highly dependent on tangible progress in its foundry business, concrete customer commitments, and its ability to compete effectively in the rapidly evolving AI chip market, rather than just market speculation. Look for official confirmations of new deals, significant shifts in financial guidance, or breakthrough product announcements as important upcoming catalysts. Finally, a quick disclaimer. This analysis is for educational purposes only and is not financial advice. Investing in stocks carries inherent risks, and past performance is not indicative of future results. Always conduct your own thorough research and consult with a qualified financial advisor before making any investment decisions.